Hi, this is Andre Rivers. I want to welcome you guys to another segment of Finance Friday, and today we're going to discuss the different quadrants of employment or income. So there's four that I like to think of specifically. One is an employee, that's a person who's a W-2 based employee. Another is self-employed, which is a 1099 employee, so somebody who doesn't have taxes removed from their accounts immediately. The third is a business owner, and this is one of the most profitable. And the last then is an investor, and these are the people who make money out of money and not really have to pay a segment of taxes. So we're going to talk about, in terms of tax benefits, the benefits of each of these. So with the employee quadrant, that's going to be pretty much the worst because that's the heaviest. You're getting basically taxed for your income directly, and you're not even receiving the money because your employer is taking the money out of your account before you even see it. So they have to claim taxes on your behalf. So there's money that you won't ever see because you're taxed before you're even paid. So that's going to be the heaviest tax one. The second one would be self-employed. Now, a lot of people, a lot of millennials, a lot of younger people, they have this thing with being self-employed or self-sufficient or an entrepreneur, but that's not ultimately the best way to make money when it comes in terms to paying taxes as a self-employed person, because ultimately you're not getting a bang for your buck because you have to do all of the work. You have to make all of the phone calls. You have to handle your payroll. You have to do the work, whatever the business entails. So when you make your income from that quadrant, ultimately you pay the heaviest in taxes as well because it's just you. You're only basically taking care of yourself. You don't have employees to pay for. You don't have a lot of bills to pay for. You don't have a lot of things you claim on your taxes. Therefore, the self-employed would be the heaviest tax quadrant. All right, and the third is going to be the business owner. A business owner, you're going to be taxed a little bit more leniently. And these are the people who are big business owners. When you hear stuff about Amazon and Microsoft not paying taxes, is because taxes are technically a penalty for not doing what the government wants you to do. So when you're a business owner, you're employing someone. If you're a real estate person who owns a real estate company, you're giving houses, or feeding people, or education. All of those things are basically, you get to escape taxes because you're doing something that the government would need you to do anyway. So you escape the taxes that an employee or a self-employed person would pay because you have business expenses such as employees and your business, your bills, your cost of business, and basically you'd be able to write a lot of things off where you're not heavily taxed as the first two quadrants are. And the fourth is going to be the investor quadrant. And this is people who make money off of their money. These people, since they're not basically trading time for money, it's probably the most profitable because you still have the hindsight and you still have the ability to make other moves. But an investor is basically using his money to invest into things, whether it's stocks, whether it's business, whether it's real estate, and then they're basically receiving a lump sum at a later time, which they may pay capital gains tax on, but ultimately, depending on if it's portfolio income versus if it's capital gains. If it's portfolio income, that means you're not basically even using the money at that moment. You're just keeping it in your investment portfolio and you're keeping track of the gains. Capital gains is when you're closing that portfolio and getting the cash. You'll have to pay taxes on the cash that you receive from that capital gains. So there's a difference with that, both in the an investment portfolio versus receiving capital gains as well. But that's also the second when it comes to not having to pay taxes or not having to basically deal with a heavy tax burden. An employee and a self-employed person, you're ultimately paying half of your income towards taxes. A business owner and an investor, you have different ways to combat those tax expenses. So those are the 4 quadrants, and that's our lesson today regarding how to basically dodge the heavy tax burdens that employees, self-employed people have to pay, and also how businesses and investors use their expenses or use their portfolio to dodge the tax burden that we may look at them as if, wow, how are they not paying taxes? Or wait, how does Amazon not have to pay taxes? Or what are they? Because they have other expenses that cover that income to debt ratio. So that's our information for today. I want to thank you guys for tuning in to Finance Friday. My name is Andre Rivers, the founder of RIFLcorp.com. If you want to learn more about finance, you want to get more in tune with trading or coaching, different things throughout the finance world, please contact us at www.riflcorp.com and also follow us on Instagram at riflcorp.com.